The market continued its slow march into a typical spring market as all the metrics improved slightly this week. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 24th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. Starting off with the week's stats, inventory remained at 22 this week. The average asking price of the homes on the market was $1,888,000, which is slightly lower than last week's average of $1,987,000. 7 homes asking an average of $1,718,000 went pending this week. That is less pending homes than last week's number of 11, with a higher average asking price from last week's $1,658,000. A total of 4 homes sold this week with an average sales price of $2,107,000. That average asking price was up from last week's average price of $1,949,000, and the total number of sold homes is lower than last week's 6. So now that we know how the market performed this past week, we can look at the broader trends that help give us insight into where the market might be heading. But before we do that, if you find this information helpful, don't forget to hit that subscribe button and like, so you'll always be up to date when we post a new update. And if you do find this information helpful, share it with a friend so they'll always be up to date on the latest trends in their market as well. Now let's look at the market indicators. Starting with inventory, it stayed the same like we said earlier already. We're still at about 50% of a normal spring market inventory. There are a higher number of coming soon listings on the MLS, so this number could jump up, but for now, we're giving the indicator score 78 this week. The low inventory definitely favors a seller. The turnover rate improved more this week, now up to 132% of a normal market turnover. With low inventory, that is an even more impressive stat. We are well over 1 month of greater than 100 market turnover. With that in mind, we are improving this metric score to 57. Homes are continuing to sell over the asking price on average again. The over asking price isn't very high, less than $15,000 over asking on average, or 0.7% over the list price. But anything in the 1% plus or minus range means buyers and sellers are very much aligned in their perception of value. With that in mind, the over-under score this week is getting a mark of 55, just slightly favoring the sellers rather, because it is a little above asking, but not by much. The average sales price has been climbing rapidly over the past few weeks. Just 3 weeks ago, we were averaging in the high 1.5 million range, and now we are up to 1.8, the mid 1.8 range. That's an increase of more than $250,000 on average. With this increase in values, we are moving the score up to 62. It's not as high of an average as we saw last year, but it is the same as last summer, and a good place for us to kind of level out at. Despite the continued layoffs in the tech sector, and the scare of the tech financial sector with the Silicon Valley Bank and others that we've seen, we continue to see tech equities perform well. They are up another 2.6% from last week. As long as the Silicon Valley economy feels stable, we will continue to see home buyers migrating here for more affordable homes than they can get in the Silicon Valley with the same great school ratings. We are going to move this metric score closer to the middle, but still keep it just on the buyer side at 45. As long as there's a little bit of uncertainty in the tech sector, that indicator is going to stay below neutral and on the buyer side. But as soon as there's more confidence and buyers know that their money is secure, they're going to come back to return to looking at our market for homes specifically. The other big indicator that was starting to slow us down at the end of last month was interest rates, and they are continuing to improve this week. We're down another 18 basis points, down to 6.42% for the average 30-year fixed rate mortgage. We're still keeping this indicator score well into the buyer's side because if money continues to be expensive to borrow, it will hold home prices in check. If, however, we get below 5.5%, which could occur here in the next quarter, I would expect to see home prices start to increase rapidly. In general, we'd say that the market is continuing to improve. With inventory remaining low and the turnover rate increasing, it is starting to feel more like a typical spring market. We are improving the overall market score to 55 this week, just slightly favoring the sellers for now. But like I said during the interest rates discussion, if those get below the mid 5% range, I think we will see this housing market really take off again. If you are serious about buying, it seems like it would make the most sense to get in now before things really start picking back up, even if that means you aren't getting the best interest rates possible. I think a slightly higher interest rate is better than having to fight 10 to 15 other home buyers and paying $50,000 to $100,000 over asking, which does feel like it could return. Those trends could return here in the next few weeks if rates continue to reduce. I hope this update helped you understand how our market is affecting your options. Let me know in the comments down below, or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, remember to share it with a friend and hit the like button so you'll always be up to date on the latest real estate news. And don't forget to subscribe. Thanks again for joining me. My name's Tony, and I'll see you next weekend.